3. Semester B.com. Examination, March, April 2023 and 2024. NEP Solved Question Paper 2024. Commerce. Paper 3.3, Company Law and Administration. Section A. 1. Answer any 6 sub-questions. Each sub-question carries 2 marks, 6x2 equals 12. A. What is a statutory company? A statutory company is an independent corporate entity that is established by a state or federal government legislative. B. State any 2 features of public company. The name should be along with suffix limited. No restrictions on share transferability. Issue of securities to the public. Directors minimum 3 and maximum 15. C. What is an agenda? An agenda is a requisite of a meeting, which sets out the chronological sequence in business to be discussed and transacted in the meeting. D. State any 2 functions of promoter. Idea for establishing a company. A detailed investigation. Selection of company name, bank, legal advisor, auditor. Selection of first director. Loan arrangement. A. What is authorized capital? Authorized capital, also known as nominal or registered capital, is the maximum amount of shares a company can issue to its shareholders. It is defined in the company's Memorandum of Association. F. Define company secretary. According to the Section 2(1)(c) of the Company Secretary Act, 1980, company secretary means a person who is a member of institute. G. Define joint stock company. According to Chief Justice Haney, a company is an incorporated association which is an artificial person created by law having a separate legal entity with perpetual succession and a common seal. H. What is winding up of a company? Winding up of a company is the process in which the company ceases to exist anymore as a legal unit and its possessions are managed in order to discharge claim of its creditors and members. Section B. Answer any 3 questions. Each question carries 4 marks. 3x4 equals 12. 2. When and how statutory meeting is convened. Explain briefly. Statutory meeting. A meeting to be held within 6 months from the date of commencement of the business by a public company, limited by shares or limited by guarantee and having a share capital. It is held only one time in the lifetime of a company. The purpose of the statutory meeting with its statutory report is to put the shareholders of the company in the possession of all the important facts relating to the new company, what share have been taken up, what the money received etc. by the Board of Directors, year report to be prepared and sent to every member of the company at least 21 days before the date of meeting. Information to be mentioned in the statutory report. Shares allotted. Cash received. Abstract, receipts and payment. Directors, auditors and other managerial personnel. Contracts. Underwriting contract. Arrears of calls. Commission of brokerage. Report certification. To be certified as correct, by not less than 2 directors, one of which must be a managing director and it has to be filled with the ROC. In case of default 5,000 rupees fine to be payable. 3. Distinguish between MOA and AOA in brief. Memorandum of Association. Articles of Association. 1. It is a primary and main document. It is a secondary document. 2. It is a subordinate to that Act. It is a subordinate to the Act and MOA. 3. Clauses of MOA cannot be easily altered. Members have a right to alter the AOA by a special resolution. 4. It is a charter of the company and defines fundamental conditions and objectives. It contains the rules and regulations framed to govern the internal management. 5. It defines the relationship between the company and outsiders. It defines the relationship between the company and its. 4. Explain the features of equity shares, permanent shares, voting rights, additional profit, limited liability, dividend at the end, liquidity. 5. Explain the power of a managing director to affix the company name seal on any document, to draw and endorse check and other negotiable instruments, to sign any share certificate, to direct registration transfer of a share. 6. What is annual general meeting? State its features. The meeting to be held by all companies once in year to transact the ordinary business of the meeting is called annual general meeting, AGM. Features of AGM. Gap between 2 AGMs must not exceed 15 months. Report of profit and loss earned and balance sheet to be attached. To be held within 6 months from the preparation of balance sheet. There will be only one AGM conducted in one financial year. In case of default of holding AGM, 50,000 rupees fine to be paid, and if it gets continued, 2,500 rupees on daily basis is fine. Section C. Answer any 3 questions. Each carries 12 marks. 3 × 12 equals 36. 7. What is annual general meeting? Explain the duties of company secretary towards AGM of public company. Annual general meeting. The meeting to be held by all companies once in year to transact the ordinary business of the meeting is called annual general meeting, AGM. Gap between 2 AGMs must not exceed 15 months. Report of profit and loss earned and balance sheet to be attached. To be held within 6 months from the preparation of balance sheet. There will be only one AGM conducted in one financial year. In case of default of holding AGM, 50,000 rupees fine to be paid, and if it gets continued, 2,500 rupees on daily basis is fine. Duties of company secretary -- A. Statutory duties. Prescribed duty. Sign the annual report. B. General duties. Duties in relation to director. Duties in relation to shareholders. Duties in relation to general public. Duties towards office. Miscellaneous duties. 8. Explain the differences between private and public company. Basis public company, private company. 1. Minimum number of members 72. 2. Maximum number of members unlimited 200. 3. Director minimum -3, maximum -15, minimum -2, maximum -15. 4. Invitation to subscribe shares to public, no restrictions prohibited. 5. Transferability of shares, it is freely transferable, restricted. 6. Quorum varying between 5 to 32 members. 7. Managerial remuneration ceiling, yes, not applicable. 8. Retirement of directors by rotation 2/3 not applicable. 9. Minimum paid up capital 5 lakhs 1 lakh. 10. Commencement of business, it shall commence after the grant of certificate of commencement of business, it can commence immediately after incorporation. 11. Statutory meeting, it must hold a statutory meeting and file with the registrar in statutory report, there is no such obligations. 12. Managerial remuneration limit must not exceed 11% of net profit, no restrictions. 13. Suffix used limited, private limited. 14. Consent of the director must file with registrar a consent to act as a director of the company, the directors need not to give their consent. 15. Qualification shares, the directors required to sign an undertaking to acquire the qualification shares, the directors need not sign an undertaking to acquire the qualification shares. 9. Explain the features of joint stock company. Incorporated association, voluntary, artificial person, separate legal entity, perpetual succession, common seal, limited liability. A. Limited by shares. B. Limited by guarantee. Share transferability, separate property, delegated management, capacity to sue and be sued, limitation of action, maintenance of reserves 10. High capital contribution, various sources of finance, loan on its own name, bound by numerous rules. 10. What is prospectus? Discuss the contents and significance of prospectus. Prospectus. It is a formal document that a public company issues to invite offer from public for subscribing its shares, which include all material information related to shares that a company offers to the public. Contents in prospectus. Name and address of the company. Classification of shares. Name and addresses of the director. Name and addresses of the auditors. Voting rights at the meeting of the company. Promoters and underwriters details. Time of opening of subscription list. Reserves and surplus. Amount of preliminary expenses. Significance in prospectus. Document in writing. Invitation to public. Related to securities. By or on behalf of the company. To subscribe or purchase. 1. Briefly explain the various stages involved in the formation of a public company. Promotion. Incorporation. Raising of share capital. Commencement of business. Thank you. *** Subscribe to our channel and like the video. If any questions, let me know in the comments.